Good afternoon, guys. Welcome back to the channel. It is Saturday, September the 17th, and I wanted to talk about or go into detail more so about a discussion that I get, or question I get asked quite often. I think this question comes from mostly newcomers or beginners that are looking to start trading the future markets. Okay, so this is pertaining the ES futures contract, and the question is, what is the tick size? What is the tick value for the ES future contract? Okay, and let's go into detail about that and talk about that and kind of clear that out the way, and maybe that will kind of help people determine which particular market they want to actually trade when it comes to futures, because there's tons of different markets. You can trade the index, the stock index, of course. You can trade currencies. There are what am I trying to say? Excuse me, guys. There's energy markets. You have commodity markets. So it's something that you have to pick and choose personally. I don't want to steer anyone in the wrong direction and tell you what to actually trade. I trade the ES futures contract. And so yeah, I mean, when I first started out too, same similar question I had. Okay, how much does it cost to start trading the ES futures contract? Okay, and here's the thing. I like trading the ES because the tick value is higher. Okay, and the tick size, like most of the index contracts, it moves in quarter increments. Okay, so it's 0.25 quarter increments, 1 point. Okay, so and with the ES, it actually moves in quarter increments, so it takes 4 ticks just to get 1 point in that market. Okay, but once for every point that you do receive in profit is $50. So you have to take that into consideration. Okay, some of the other markets, like if you're trading the micro markets, it's a little different because their contract size or tick value for that contract is actually smaller, because we're dealing with micros versus the E-minis. So E-minis do pay out more, but micros don't pay out as much. But a lot of people turn to the micros because they may not have the amount of money or capital to actually start trading the E-minis. Okay, and they don't want to leverage that kind of risk as well. Put as much money on the table when it comes to trading the E-minis over the micros. So, but with the micros, like for instance the MES, which is the micro, pretty much ES contract, or the micro E-mini S&P 500, same thing. It moves in quarter increments, but the tick value, okay, meaning the dollar amount, is actually $1.25 per tick, versus the actual E-mini contract itself, meaning the ES, okay, is actually $12.50 per tick, or each tick, I should say. Okay, each tick. All right. So you have to kind of think about things when it comes to trading, because think about it. If you trade with one contract, and you already know that the ES with the ES futures contract, it's set at $12.50 for every tick, which is for each tick. Again, like I said, it's quarter increments. It takes 4 ticks to give you 1 point in the ES. So if you make 1 point in the ES, again, that's 4 ticks, and you will receive $50 in profit. Okay. Now think about it. If the market goes back against you, then that means that for every tick, every quarter increment that the market moves against you, same thing, you will lose $12.50. So with 4 ticks, you take a loss of $50. Okay, and that's per contract, and that quickly adds up pretty quick, depending on the lot size or the contract amounts that you actually are trading with in the market. So you have to take those things into consideration. This is why I tell people, kind of recommend in a sense, but I don't want to lead anyone down the wrong path and telling them which particular markets to actually trade. It's all about what you feel comfortable trading and how much money you have to actually trade. But me, to be honest, they didn't have the micros like the MES. It wasn't even offered when I first started trading. I mean, you just had the option of trading the, straight flat out the ES futures contract, the E-mini, and that's it. Okay, there was no micros back then, but I believe the exchanges, along with the brokers, have allowed and opened up, the doors to get more people, trying to get more people to actually trade, who are interested in trading, with lowering the amount that it takes to actually, for one, get into trading. Okay, so that's why they came up with the micro contracts. All right, so say for instance, like the MES, yes, you could get in with a lot less money starting out trading the micros than it would take you to trade the ES, because I'm going to talk about that in a minute. Because a lot of people, the next question is, well, how much do I need? What is a minimum amount that I should deposit into my futures, not my futures, but into my brokerage account? What is the minimum amount needed to deposit into my account? That's the next thing people ask. And each one of those markets, is different when it comes to the actual dollar amount, okay? And all markets are different, all right? Most times it's depending on your broker too, because they kind of set the rates when it comes to trading certain contracts, how much money you need per contract to trade, okay? But let's go back to, like I said, a tick size, tick value. Again, both markets, whether it is the ES futures contract or the micro ES futures contract, if you want to call it the micro E-mini S&P 500 contract, either one, both of them move in quarter increments. So like I said, 4 ticks, 1 point. The difference is the micros, you will accrue $1.25, okay, versus $1.25 per tick, versus the E-minis, where you will receive $12.50. So yes, it's a significant difference there, okay? Significant difference there. It's like 10 times the amount that you could receive. It is 10 times the amount that you could receive trading the E-minis over the micros. But the reason why the micros were actually started was, like I said, to give more people, traders, the opportunity to start trading without having to leverage so much money or put so much money of their capital on the line when actually trading. So they kind of, allow, instead of having to just jump up and start running, you can take baby steps and start crawling and learning how to trade and taking trades at a slower pace and not having to put on so much risk at the same time. So I recommend people, especially if they're starting out, and to not just jump right into the E-mini markets. Specifically, trade the micro markets. Start off that way. There's tons of different micro markets. There's several of them. You can trade, and yes, you won't make a whole lot. But it all adds up. There's people in the Discord, and yes, we have a great Discord community. So if you're interested in joining the Discord community here on Futures Trading with Mike, just simply find that link down in the description portion of this video. Click the link, invite yourself in, and it's free of charge, okay? We have approaching about 300 members now, and I know I'm interjecting this, but I want to talk about that as well, the Discord community, because a lot of people, a lot of traders have found it very beneficial in joining the community here on this channel and joining the Discord channel. One, because each morning we come together as traders and we talk about the markets, specifically the future markets, okay? So doesn't matter if you trade the ES, doesn't matter if you trade the MES, doesn't matter if you trade the, the Dow, the NASDAQ, whatever it is, but as long as it pertains around, to the future markets, join us each and every day. We talk about the levels we're looking to trade. We talk about our strategies. It's a question and answer type forum. So if you got a question, someone's going to always have an answer. And I found that it really is so much more beneficial to especially beginner traders. I'm not saying you have to be a beginner to join the Discord. You can be an experienced trader if you want to, but it's just a great wholesome community where we as future traders, fellow like-minded traders, come together and kind of converse. So if you're looking to join it, all you have to do is find the link down in the description portion of this video. Click on it and invite yourself in free of charge. But let's go ahead and talk about, again, like what I was saying. So yes, I recommend people to really start off with the micros over the E-minis. Definitely if you're first starting off. But first and foremost, I would definitely say learn market structure. You guys know I say this all the time. Learn market structure. Learn price action. Okay, you have to understand. Learn the core concepts of trading. The things you need to get you off the ground. Develop a great strategy. You can watch my trading if you want to. I have my live recorded sessions. I'm talking about my strategy I use, and it's pretty simplistic. And I'm going to tell you what, we have lots of traders within the Discord who have learned the strategy, and they are doing pretty well. So like I said, that's why the Discord helps out. So as well, yes, I highly recommend guys, starting off with the micro. Starting off demo trading. Once you learn how to, trade, got a great strategy, it works, you're consistent. you're consistent in profit, even in demo or simulation, switch over, and then you got to decide: do I have the capital to trade the E-minis, or do I have the capital to trade the micros? Me personally, if the micros were offered back then when I first started trading, I would have definitely jumped into the micros before trading the E-minis. But I had to bite the bullet and jump head first and took on head to head and toe to toe with a bigger market, which was the ES, and it's not one of the easiest markets to trade. You know what? People ask what's the easiest market to trade. I really don't. I can't answer that because I don't trade a bunch of different markets. All I can tell you is that some markets are more fluid than others, meaning they're more liquid. They move quicker, and the ES is more of a. I like the pace of the ES. You do have to be more patient, but it's patient, so you have to be patient with it. So, like the Nasdaq, it's pretty quick. Crude, it's pretty quick. So, you just have to have that kind of I guess has to kind of mirror your personality in a sense, or whatever the case is, and you have to be very skilled to trade faster paced markets, okay? But the ES has a lot more volume, so that's why I choose to trade the ES futures contract over most other contracts, all right? So that's pretty much all I had to say when it comes to the tick size and the tick value of both markets, the micro or the E-mini ES futures contract. Doesn't really matter. They both move the same when it comes to when they move each tick. For every 4 ticks, that's a point. Just think of it that way. Every quarter tick or every tick, when you get 4 ticks, that's 1 point in the market. So every four ticks it moves, it's 1 tick. It's 1 point. All right. So, but let's talk about a lot of people ask, well, how much money do I actually need to put into my brokerage account, to deposit into my account to start trading? All right, let's talk about that, okay? Because each market is actually different. With the ES futures contract, with my broker, and again, it depends on your broker, it's $400 per contract. So I have to have a minimum of $400 in my brokerage account just to trade one contract. Now, don't be foolish and just put $400 in your brokerage account and think you're going to trade the ES, okay, starting out. If you win the first time, the second time, it's pure luck, all right? I tell people, because people ask me, well, how much money should I have to start trading with? I hate giving people, I hate using the word hate, but I dislike using, I dislike telling people a certain amount that they actually need because it's personal, guys. You have to really decide how much you really want to put in your account, first of all. How much money do you have that is outside of your, your money that you need to live off of? Can you set to aside to put to an account? I do say that if you are looking to start trading, and I would put $5,000 into account. I think that's comfortable enough to trade, especially comfortable enough to trade the ES futures contract. If you want to trade and again, I'm talking about the E-mini S&P 500, not the micros, but if you're looking to trade the micros, possibly the same amount. Be comfortable. Have a certain amount of money in there because, especially with the micros, you put $5,000 in an account, you can really trade a certain amount of contracts. And we'll talk about how much is the margin, or what the margin size is, how much money you need per contract to trade the micros. Now, I don't trade the MES, but there's a lot of people on the Discord channel who trade the MES. But needless to say, it doesn't really matter because if you look, when they're looking at the MES and I'm looking at the ES, the price levels are the same, so it doesn't really matter, okay? It's just you just trade the micros and not having to leverage as much money as you do with the actual ES futures contract. So, but again, my broker, it costs $400 per contract. It costs me $400. I must have $400 per contract in my account to trade it. Now, when I first started off, again, yes, I put $5,000 in my account, and no, did I start trading with 4 or 5 contracts, 6 contracts? No, I did not. All right. I traded one contract. Okay. Why? Because it's smart to only trade one contract when you're first starting off. Because you got to think about it like this. Okay. So if one contract costs me $400, I must have at least $400 in my account to trade one contract. All right. And the tick size or tick value is tick size moves the market moves in quarter increments. This is for the ES futures contract. And that means the tick size or value, the tick value is $12.50. Okay, that quickly adds up to, 1 point is $50. Now, I could lose $50 real quick, all right, trading the ES futures contract, the market, the ES moves. When it moves, it pulls back pretty significant, guys. So a lot of people don't know how to weather the storm because they really don't know how to actually trade correctly. They don't know where to maybe put their stop loss, where the profit target should be at. They just jump into the market thinking they're going to take it, and they look for price to move to a certain area, and they're going to get out. But the market can actually pull back to a certain level before it moves up there, and then you either get stopped out or you close the trade out and you lost money, and then the market moves in your direction, or whatever the case is. But to put $400 on an account and then start trading with one contract is nonsense. All right, like I said, put a certain amount in your account, trade with one contract, because the more contracts you have on a line, for every 4 ticks, that's $50. 2 contracts. If I put 2 contracts on a line, and then I lose, for every point the market comes back against me, that's $50. So the market comes back against me with 2 contracts on, that's $100. Okay, all right. So, and then for every point that it moves, it comes back. For every point that it does come back against me, that's another $100. That's another $100, and that adds up pretty quick. So you got to think about it. Imagine putting on 6 contracts, and the market comes back against you 1 point. That's $300. You're already in the hole. Comes back against you another point. That's $600. You're already in the hole. Okay, and every point from there is just another $300 that you're in the hole. All right. Yes, you could, if the market moves up and you got 6 contracts on, then it could, for every point that it moves in your direction, you'll make $300. But I wouldn't, take the risk of doing that starting off if I was a newcomer, and you would have to have you're using more than almost half the size of the money that you have in your account. So you put $5,000 in, and the day trading margin is $400 a contract. Well, you're leveraging almost half of your account on a trade. That doesn't make any sense. I would never leverage that kind of money. I would never leverage that amount of money that I have in my brokerage account. So I guess some people will say, well, how much money would you leverage in relation to how much money you have in your brokerage account? Again, I don't want to answer that because that's something personal. It could be 10%, it could be 20%, but I would never in a million light years leverage 50% of my account on any particular trade. All right, at any time. So with my broker, and I want to stop because I want to stop here because my broker is AMP Futures, and which is AMP Global. But they do not, when it comes to trading futures markets now, they no longer do business with NinjaTrader. So they kind of severed ties many years ago. And I just haven't been using them, when I first started off 10 years ago. And it was one of the brokers you could actually use at the time when trading any of the future contracts. So I chose them. And like I said, they were doing business with NinjaTrader, and they were an offer broker service listed on NinjaTrader's website years back, but they've severed ties, and now you can no longer use them. I'm grandfathered in, so I can still use them as long as I do not sever my ties with them as a client. So, and I haven't done so. So, but you have to turn NinjaTrader and see. I don't know if NinjaTrader offers or allows outside brokerages, for you to turn to an outside broker anymore. I don't know if they just want to try to keep people in-house, their clients in-house, and that's why they came with their own brokerage, side or own brokerage service. So kind of question NinjaTrader and see what kind of services they have to offer when it comes to brokering. I've heard great things about their brokering service when it comes to actual, round term rates, cost of commissions and things like that, and actually, their day trading margins. So like I said, it depends on your broker at hand, so you really need to talk to your broker. But with my broker, with the MES, which is the micro E-mini S&P 500, it's the day trading margin is $40 per contract. So which means you have to have at least $40 in your account to trade one contract. All right, that's a big difference. That's 10 times less the amount when it comes to the ES futures contract, which is $400 per contract. So I have to have a minimum of $400 in my account per contract to trade. Okay, so if I even wanted to open an account with my broker, their minimum deposit is $500, but the minimum amount I have to trade one contract with the ES futures contract is $400. So talk with your broker and see what their day trading margins are when it comes to trading, specifically the MES or the ES futures contract. Okay, now that you also have what's called maintenance margins, and I don't really like to get into that because, and I'm not, I don't recommend people doing, trying to hold a trade past the close of the market because the maintenance margins are extremely high. Say, for instance, like with the ES futures contract, it's $10,000 per contract, okay, to hold a trade through the close of the session. Okay, that means past the close of the actual day trading session. With the MES, it's 1,000. It's what they call a maintenance margin. Okay, but again, with the MES, it's $1,000. And the margin is $1,000 to carry a trade. That means $1,000 per contract to carry your trade through the close of the daily session. Okay, but that's pretty much it, guys. It all just boils down to really which market you want to trade. I know you can be enticed by wanting to trade a market that has a higher tick value, of course, because I was too. But the ES futures contract was the only market back then that I could actually, not the only market I could actually trade, but I was interested in trading the ES. I was interested in trading the NASDAQ, and I was kind of flipping back and forth. But I just levitated more so to the ES because of the tick value. Okay, I mean the Nasdaq is $5 a tick, and with the ES, it's $12.50 a tick. So to me, that was just like a no-brainer. It was like, wow, that's a lot more. That's 2.5 times the amount. More. So that's why I chose the ES futures contract. But anyway, that's all I have for you guys today in this video. Hopefully that answers some questions for individuals that may be starting out, that may be beginner traders and looking to start, trading one of the index or indices like the ES futures contract, or maybe the MES, the micro. So hopefully that answers your question. And just kind of do some homework yourself. Kind of talk with some brokers, and first of all, and see if you choose to use NinjaTrader. Can you use an outside broker, or do you have to go through the NinjaTrader brokerage and services? And if so, just kind of talk to them about the dollar amounts and things like that. So, but that's all I have for you guys. Take care. Have a great weekend, and that's going to wrap it up.